previously on Bitcoin Crypto Morning TA.
They're ping-ponging back off each other.
People are seeing this, and those memories of fear are coming back.
We're trading at 60 now.
What the heck is going on down here? I don't know.
All of a sudden here, we started hearing screaming, buy.
Now we're sitting down 875 points.
We've now broken Dow 10,000. The Dow Jones Industrial Average dropped more than 900 points.
The market didn't work. It broke down. The machines broke down.
Fear came back into the market in a very big...
Which one's where will get candlestick?
Ah, yes, the angelic voices of the children's choir of Enchanted Wicks. Letting us know that a juicy wick has been sacrificed to the gods of wickedness down at this channel of eternal monotony and channel of ascension support at 97.6. And while the recovery was swift and powerful, we all know how accurate these darn kids in Enchanted Wicks are. But is that a data alert? Yes, it is. Looks like the MACD has crossed bearish again, and the last time she crossed bearish back on January 8th, we did see continued downside of 5%, and the time before that, way back on December 17th, after getting our first rejection from that darn channel's resistance, we saw continued downside action of 13%. So if we average the two bearish stanks out to about 9%, we'll get continued bearish pressure down to 90.7-ish. Snap, which is also our next channel of eternal monotony support. So these arbitrary doodles I've been putting in are lining up. Now, depending on what side of the cuckish bed Wall Street wakes up on this morning, we could see residual downside pressure to show the world that they can panic sell too. And those levels I wouldn't be surprised to retest would be this channel support down at 95.5-ish. And there is one last devil's fib way down at 91.7. Carving out a cute little bear flag, and the price probability of this pattern is, and sing it with me now. Oh, you take the pole, you slide it all, the breakout point, and then we're all at 95.5-ish, which is exactly at that support level of this channel. So, the arbitrary doodles on this chart, they're lining up. Continued bearish action might still be on the table. As of today, we've retested the 23.6% fib to a T, and it would be perfectly normal, not doomsday Barishnikovs, but completely normal to retest this channel of ascension support way down at 95.5-ish. Snap! That's that arbitrary number that keeps coming up.
Must it take that long to switch scenes? Must it always take that long? Only on a live stream. Like when it's not live streaming, it just flips scenes just like that, like less than a second. Boom, boom, boom. Of course, on a live stream, just sits there. And then I gotta, well, should I click it again? Should I click it? And then it usually catches me clicking. Anyway, I was about to say, Lord love a duck, skibbity toilets, if she didn't do just that. You know, that's the funny thing about the TA on this channel is that the same numbers keep coming up. And, you know, last week and the week before, we were talking about 95.5 and, you know, 95.5 came in. We crashed underneath. This is the thing about, like, what I don't understand fully about this historic collapse. Like, it's a historic collapse of liquidations, right? $2 billion worth of liquidations of leveraged longs right? So make no mistake what we're talking about when we say liquidations. It's leverage longs, people in leverage trades. So I think I read something about 700,000 traders, liquidated, which is horrible because that means their account was washed out. They got margin called and they're done, right? Can you imagine being, working your way through the bear market, getting into the bull, getting up over 100K and then getting liquidated? I mean, it's no laughing matter. It's for sure, because it's very sad that some people's dynastic legacy that just got washed out. And I mean, here's the thing I always say about trading, like the reason why I'm able to read charts so well is because I lost a lot of money learning how to do it. This is one of those things where you got to learn the hard way. And if you don't, you eventually will, and if you don't, well, you're like the 1% of the 1% of the 1% of the 1%. So here we have the great tariff. This will be known as the tariff, so like I was going to do like top signal number 5, the tariffs, right? Because if we go back to 2020, 21, it was really when the interest rates went up that it was the last top signal before she basically went south for a couple of years. Now, here's where we go underneath the 200. As you all know, once we're under the 200, we're in bearish territory. But I have to remind everyone that this is what has to happen in order for the market to continually going up. And what I mean about that is we need the fear and index to go down. We are straddling the 70s, in greed, the 70s and 80s for like months, right? There's not much room in that, like the fear and greed index is like that one of those cars that go over the cliff and into the water, and then it's filling up with water and you only have that much space to breathe. You need that air to come down in order for us to make another move. So if there's silver linings to the data, the fear and greed index, or the FOMO index, which we refer to it on this channel, has gone down to 44. Now I would like to see it a little, maybe extreme fear, that would be my bullish aspect. But this is what has to happen. We don't, when we're up in 70s, and you hear everyone saying, well, we need the fear and index, we need to be in fear again, right? You don't want that, because you know what that means. It means that we're going to have a dump in us for us to get that. And that's what we did. So we had that dump and now we're in fear. It's not as fearful as I think we should be, because I do believe the liquidations when it comes to traders is empty calories, if that makes any sense. It's not like institutional selling or long-term hodler selling. It's more like just liquidations. That's how you just like scoop off the froth of the market. Whoosh, gone, And then we see here Bitcoin dominance. Oh, you can't see that. Damn it. Yeah, it's not like you're going to be, oh yeah, can you? No, you can't. Anyway, Bitcoin dominance, 60.6. That's high. It's very high. 24-hour volume, 334 billion in the market. Total market cap, 3.12. Imagine getting under 3 trillion. That's market sentiment, no likey under 3 trillion. At the end of the day, you have to remember that as violent as this dip was, let's see where we 105. How many days ago? Friday. That's right. 105 Friday. Wick to wick. Oh, I can't. Oh, that's the wick. That's the devilish red wick right there. Wick to wick. This was 13%. 13% is no big whoop. It's nothing to take a hairy spaz about. 13%. But, I mean, is the downside over? I kind of feel like there's a couple metrics that we might have to hit too, and if we hit them, we'll also hit a bunch of knock-on effects. Here it is. Hey, let's take this black off here. A little frog in me throat there. 88.8. Let's move on to the ding dong so we can get a better representation of this. Look at this wick. What did we say yesterday? That which once winked will get candlesticked. Those darn tootin' little brats. You know, as soon as those come in, you know, God, I bet you when you watch those videos and you see those darn tootin' kids come across the screen, you're like, God damn it. We all know how accurate that TA is when those when the enchanted wicks come. And sure enough, look at this. We candlesticked exactly. Like it's almost exactly. Then we're mincing like a couple $100 here. That's right. Terra Rooster works every time, 76% of the time. I was wondering who again gave me that metric. That's right. It was Terra Rooster. Good morning, Terra Rooster. Good morning, Bruce May. Good morning, Backup Kid. Member for 9 months. Wow. Member for 9 months. That's why you got the wrench, Backup Kid. So I figure, you know, like if you're a channel builder, right, you should probably have a wrench. I know sometimes in the piano stream, it's just a sea of wrenches, but that's what membership and, you know, building the channel is. If you're channel building, you should be able to, you know, get people out of here. That's the way I think. Not that there is. This is a good crowd, good clean crowd in this channel here. Good morning, Alexandra Chop G, Randy Hipper, Jimmy Cocos, and Scotty Mo. All right, so here we cleared off that wick, as painful as that was. This is too small for, I guess if anyone's watching on a phone, it probably is. Let's get this a little bigger. Here you can see, and this is right at our channel of Eternal Monotony support. And, you know, what I'd like to see today or this week is getting up and over this channel of support. We don't want to be in here. This is like, this is the basement. We need to be in here. And if we can't get above here, well, we'll probably retest this, which is one of those metrics I was talking about. 90K, 90.8-ish, a little bit of a psychological so-and-so. That's where we might retest. You can see we do get bought up at this 92.7 level. Where are we right now? We're at 94.3. So we did get a rejection from 95.5. Not good, but you know, that's the way it goes. You can see right here, we threw a long hair don't care wick way down at 88.8, our favorite little Asian number. That's where everyone on that side of the earth finds it very good luck to get their buy-in. And if they did, you can see they made a lot of money on that investment. Now, if they traded it, they probably got washed out because they were leveraged and then it came back and it took their stop loss. There's 82K on the table. Let's see where 82K is, Metal Family. 82K. What is there anything significant about 82K? There's 82. It's kind of no man's land. I would think 80.3 is a little more. Another level would be 87.9. What is this coming? Oh, this is a bear flag that takes us to 82. Oh, yeah. Well, there's this bear flag from way back here. Can you see that? Sorry about that. Can't see that. This is the bear flag from way back here. That would take us. Come on, you son of a. There you go. Oh, that's a. There you go. There's the bear flag. Takes us to 82K. Now, if we were going down to 82K, that would put the fear and greed index, aka the FOMO index, way down, probably in the 20s, and sentiment would be in the stank, right in the skibbity toilets for sure. And that's when, you know, you would run into that burning house. Now, when we have these fluctuations in price that are so violent, what am I doing here? People bring in the narrative of this is what. Come on. I thought undo does this. You're not going to work for me? Oh, I'm probably erasing stuff now. When you bring in the narrative as the top in, have we topped out? And the answer to that is nobody knows, right? So anyone telling you that they do know is lying, you know. So because nobody knows. What are they, psychic? Or is there psychics? I've been actually finding myself in these YouTube wormholes of psychic fails. I don't know why it came up on my feed. Because it's so funny and cringy. David Sony Music. Oh, I forgot. I got a little announcement for David Sony Music. Thank you for showing up, pianomattyb, for us when it's up or if it's down. Now, I didn't know this. I was someone let me know about this, but it was David Sony Music's birthday on Friday. So we're going to do a little put in happy birthday David Sony Music for him today. Happy birthday to you. Happy birthday to you. Happy birthday, David Sony Music. I haven't forgot that you didn't sign the Leader House band back in the turn of the century 2000. Nonetheless, happy birthday. Happy birthday to you. Belated happy birthday, David Sony Music. And thank you for the super chat. Much appreciated. David Sony Music, happy belated birthday. Yes, so the question was 82K, is this bear flag? That's what takes her down here. Now, I'll get to that. I got an interesting thing we'll get to on the daily after a couple more things here. We're going to go on to the weekly now. As you can see, this old channel of support. This is the bear flags channel of ascension. These channels of ascensions break. You can see this is a channel of ascension. It broke bearish, right? This is what they do. We try to break out of it. They tend to break bearish. It's not as accurate as, the Children's Choir of Enchanted Wicks, but nothing is. 2 weekly candles in a row. We haven't seen that since back in December. Oh my God, 2 months ago. What I liked about this, and it's too early because it's only Monday, that we have to close above this bull flags channel of support. So let's put it at 94.8. I call it 95. Let's call it 95. Bare minimum, we have to close this week. That means Sunday at or above 95K to keep the integrity and the constitution of this bear flag or this bull flag in its support structure. When we break down from it, well, we're starting to get into invalidation zones. You can see we threw a long hair, don't care back down at the 38.2% wick. And we're basically fluttering around our candle here at the 23.6% fib. So they're following the fibs, nothing abnormal, although I do feel this is a knee-jerk market anxiety from the tariffs. It's the market. The market doesn't like indecision. It likes predictability, right? So when you see this, they don't really know what to do. And so the robot quant bots are like, hey, sell. And then that's what we see here. I would expect, some bullish prowess to come in at these signs of weakness. However, there could be, when 8:30 rolls around and the market actually fully opens and the robots, have had their coffee and they're on the court ready to play, we might see some continued downward action. Maybe the candle goes down to 90.2. This is the 90.3 is the 38.2% fib on the weekly. Not crazy that it would do that. Not crazy that it would do that at all. And now, if you love watching economic paint dry as much as I do, the monthly chart closed. It was a nice close, a nice candle close for January. Seeing as though December was such a downer December here. Let's see what we actually did candle close here. We had a, let's call it 10% candle. Not insanely bullish, especially for the Bitcoin bull market. But hey, we'll take it. It's better than the red shooting star candle. It's a nice reversal signal too, right? So when you see a candle like this, shooting star candle, it usually signals continued bearish action. And we did get some, we went down a bit, but we fought back. Now, if for some reason February is a downer as well, and we close under 93.4, well, that would be a bearish engulfing candle. Not a good sign on a monthly chart in a bull market. Not a good sign. In fact, I would argue that any red candles in a bull market on a monthly chart isn't that bullish. And historically, I didn't see Wick's wife. I didn't see Kyle come in and put a comment in the piano bar. I just caught that before it went up the thing. I saw Kyle's name. Yeah, on the monthly chart, if we just do some historic so-and-sos here, the 2021 bull market, once we started seeing chop, it was, kind of the end. Although we lasted for another 6 or 7 months, it was, had you gotten out at the top for some reason, you just sold at 60K, you would have been happy, then you would have been sad. But if you went on vacation or went to jail and you couldn't touch the charts, then you look back a couple of months later, you'd be, oh, shit, that was a good sell. So once we see this chop, it gets a little toppy, historically speaking, right? I mean, look at this, 1, 2, 3, 4, 5, 6, and then we see chop and it's, kind of over. Whereas this one, 2017, the one before 2021, you can see, save for this little nugget here, it was basically straight tata top without any chop. And once we started chopping, we were, kind of out skis for the bull market. And now if we go back here, was this was so bizarre, I find, for this monthly, we're on the monthly chart, remember, to see something like this, like the summer bummer, like for six or 7 months of chop. If anything, it proves that we can do it is a little different. I mean, I was thinking the other day, and it's not the greatest thought. It's cold down here in the basement today. I was thinking, where would we be if not for Michael Saylor, one? Let's get Duke up here. Maybe pump these likes here. Where would we be without Michael Saylor and without the ETFs? It's a question. It's like a elephant in the room we don't really want to address, right? Because it's quite apparent that there's zero retail. So with zero retail and sans, and without Michael Saylor and without the ETFs, I know this is like, well, they're here now, so what can we do? But I'm just trying to work this out in my mind. Where would we actually be without those two megalodons coming in and pumping the bags? Would we be down at like hovering around all previous all-time highs? Would we be down here just kind of, it would seem even ultra bearish for retail if all this time it was just, we had gotten to 60. Because believe me, if you can't get a headline at 100K for retail, what kind of headline are you going to get for 60K? Almost none, right? So my question is, at what headline price does retail come in? The interesting thing about retail, though, it's slowly, then all of a sudden, right? So all of a sudden, it could be, who knows? Let's just call it 125. Gets to 125, boom! That could be like the headline that gets everyone thinking. It's humble opinion of this piano that 125 is not enough for retail to come back in. If they're not in at 100, which is a big psych level, right? 100K is a big psychological level. I don't see 125 coming in and making a big difference. Maybe it sounds crazy, but maybe 200K. Abazar, I don't do that altcoin technical analysis. It's all a function of Bitcoin outside of meme coins, which are just gambling. So I do wish you best of luck on it, but we don't do it on this channel. You can see on this monthly chart too, we threw a wick down to the 23.6% fib. Standard practice. Now, we don't want to close that. We don't want to close this monthly candle. Now, if we were to close February, let's just run this thought pattern through our minds. If we were to close February with a bearish engulfing candle down here at 23.6% fib, geez, I don't know what to tell you on that one because it's almost unprecedented. If we were to maintain bullishness, it would be an unprecedented reason to, if you know what I mean, because we are in this bull market and we are chopping and we are getting a bearish engulfing candle. So, let's go back and take a look at this 2017. There's no bearish engulfing candle. There's no bearish engulfing candle in this bull market. Where's the other one? 2021. The first bearish engulfing candle was right here. It's a hella one. It's probably the biggest one. That's a massive month of downward action. And after that, you could argue it was over. Yeah, we had a little bit of another pump back up there, but it was essentially over at that point. So Brendan says the Bitcoin game is over for retail. They're not interested below 100K nor at 109K. Yeah, that's what I mean. So maybe it's 200K. Maybe it's it's got to be some sort of spectacular headline, like 150, 200, something like that. So that's the 2021 monthly chart bull market when we saw a bearish engulfing candle. Not that we have yet, right? But if we were to, in February, that's the weekly chart, in February, see a bearish engulfing candle, that would, and it would probably close at this 23.6% fib. I mean, that's kind of like the best case scenario bearish engulfing candle. There's still the 38.2% fib at 85.6. Now, if that were to happen, to maintain a bullish outlook for the bull run, we are now basically, breaking our own logical thoughts, right? It's like this is part of the denial, I suppose, that we'd be saying, doesn't matter there's a bearish engulfing candle. Doesn't matter that the monthly chart is down at the 38.2% fib. It doesn't matter. We're in a bull run, right? We can yell that forever. But there's sometimes you just got to you got to face the facts, Now the facts have not printed yet. So until they're printed, we're just whistling Dixie. We're just peeing into the wind. Isn't that right, Squeaky McGee? We're just peeing into the wind. So, this is all speculation. Doesn't matter. But what I wanted to show here was the point of reference. This is the daily chart from 1 year ago. 1 year ago, February 3rd, 2024, we were at 43.1. Can you believe that? 43.1 1 year ago. It's hard to believe, but this is why humans human. We forget immediately where we've come, what we've endured, the pain or the pleasure. We immediately forget about it. But 1 year ago, we were at 43.1. 135 YouTubers, 64 likes. Is that, what do they call it? Is that is that when they call it you got ratioed? You got ratioed. More people didn't like it than they did like it. I think that's what that means. So when we see this right here too, I didn't want to bring this up. I was going to wait for another video to explore this. But yeah, we got a weekly bearish cross on the weekly chart. Now, let's go back to the last time we saw that was back in April 2024 at the commencement speech of the Summer Bummer. That's when she all basically started, and we were down. We are underneath that. How long is that? Okay, let's just do a little quick. From there to the wick. Come on, to the wick was 22%. That's not the worst. The worst was how long it took. Like going from there to 20. Although, mind you, remember, 22%. Who's phoning me? From China, of course. Get out of here. 22% back in the 60s is a little more violent than 22% up here. We don't notice it as much. The boat's bigger, so we don't notice that we're turning as fast or as slow. But the hardest part was the fact that it was so long. So 22%, let's just, historical, fractaliciously speaking, if the MACD has crossed bearish on the weekly, which it has, there's no mincing words about that, and we were to see the same type of downward pressure, where would 22% take us from here? Holy smokes. That would be 72.7. You heard it here first, kiddies. 72.7. Where was that? 72.7. Yeah, that would be kind of right where we kind of peaked out back there. Now, it wouldn't be the most insane thing to happen in this chart. We would basically give up most of these gains from here. And you can imagine at this point, if we're talking about mincing words and bearish engulfing candles on the monthly and topping out at here, you can imagine what the rhetoric would be down here. And, let's do a thought experiment. If we were to come down to here and then mince words again, because that's what we do. We go down to channels and we explore them and we figure out whether they're going to be support or resistance. Well, you know what that looks like, right? It looks like a head and shoulders pattern. If I ever done gone and saw one. And so if that does become a head and shoulders pattern, if we want to explore that, now this is yeah. So I mean, you take the pole, you slide it all to the breakout point, and we're all at 24K. Yeah, what do you think? 24K on the 24K on the thing. To me, if we are down at 24K, I would be convinced that this is no different than the currency trading markets, and it's all rigged. And the manipulation is so heavy that you might as well just not look at the charts and wait and look every 4 years. You know, Squeaky McGee 72.7 is either the beginning or the end or jump off. Yeah, that's the thing. I mean, what do we know, right? It's things like these tariffs, these fundamentals that would that really push the market, especially when we're in such a nothing channel, right? We're basically just mincing words, chop sueying forever into oblivion, and it takes the fundamentals to move. Because really, like if we look back here, was it was this or the 4-hour chart? Yeah, it was a 4-hour chart. See, when in a channel, you're going to develop all the patterns, right? So you have the head and shoulders, and then you break that head and shoulders. You know, we didn't actually hit as far as we ended up fulfilling this head and shoulders at 95.5. But then when you have recovery, you start building the reverse head and shoulders pattern, right? The inverse head and shoulders until you break that, you know, and at the end of every pattern is another pattern. At the end of every head and shoulders pattern, you know, is usually a bear flag or a bull flag, depending on when you break out, you know. So if we were to, let's just take a look at this potential. That's a 4-hour chart, so make no mistake. She's a noisy little so-and-so. Anything can happen. Right now, we are back into our channel. So we're having a little pump, 96.1. There you go. It's better than we needed 95.5, right? We were talking about, there it is. We needed to close up here for this week. And we're having a nice little morning pump. I think it was maybe as soon as I said, I would expect a little bit of a morning pump to come in at 8:30, and boom, there we got it. We'll see what happens with that one. We're on the 4-hour, last little thing here. If we were to do a little bit of a bear flag here, would it be so crazy? Oh, Jesus. We don't really need that. Let's just go like that. Oh, snap. Make this bear flag. If we were to break out, which would be, you know, to run down this channel of dissensions support to the breakout point, which would be 93.8. So keep in mind this 93.8 number. Then what you would do is you take the pole, you slide it all to the breakout point, and you know, then we're all at 83.5 in the low 80s. That would take fear and greed down to the skibbity toilets, and sentiment. Sentiment's below skibbity toilets. I think sentiment's maybe in the sewer underneath skibbity toilets. And that's where it would be. But it would be a nice reflection point to completely reverse the gauges, blow off the steam, blow off the fear and greed, being extreme fear. And then we get that next leg up. Or do we? It's hard to say. It's hard to say. The only thing that can really, besides fundamentals, there's really only one thing that we can really, try to figure out how the market's playing out. I see a cup and handle pattern. I see a head and shoulders in the sky. I'm looking at the moving average, convergence, divergence, the MACD. Whatever that means, let's do some doodles, aka astrology for men. Let's do some doodles, aka astrology for men. I'm looking at a triple top. Looks like the RSI is overbought. It's carving out a spinning top candle. Sometimes they call them a doji. Whatever that means, let's do some doodles, aka astrology for men. Let's do some doodles, aka astrology for men. Market sentiment and liquidity, and I go pump and dump. Should I buy? Should I sell? Am I bull or am I a bear? Let's do some doodles, aka astrology for men. Let's do some doodles, aka astrology for men. All those kooky little lines, they're wasting my time, always messing with my head. Astrology